if you're negotiating a business acquisition, this is how you can reduce the purchase price while being respectful of the business sellers and to actually get it reduced. So I just completed a business acquisition, business doing about north of 1.5 million in revenue and over 250,000 in profit. In fact, it's doing 200,000 profit, but we can get it to over 250,000. The business was actually advertised for £750,000, but we managed to get it down to around about just north of 400,000 total purchase price. Now, how can you also do that? That's not half price, but it's maybe 40% off. I haven't done the exact numbers, but it's a good chunk of money off the purchase price. And how can you do the same? The way you do that is by challenging adjusted or adjustments to the EBITDA. So business brokers and business sellers, especially sophisticated business sellers, will do something called adjustments to their profit line. And what that means is that, let's say, for example, a business is doing 150,000 in profit, they will do add backs to bring that profit number higher than what it actually is. And some of these add backs are actually real add backs. So it's normal in business acquisitions for some of the costs in the business to be added back if they are irregular costs that won't be borne by you as a business owner once you acquire the business. Now, this does not mean irregular business costs that actually are true business costs. What it means is that anything that the seller is taking out that you will maybe not take out as a business owner if you were to buy that business. The most common example is actually the director pension. So in the UK, at the date of making this video, currently you can take out £60,000 per year, per financial year, before any tax. So directors do this, especially if they know that they're coming up to either retirement or they want to sell the business. They will take £60,000 out of the business, and that would be as an admin cost in the P&L, and that would come off before corporation tax. Now, you as a business buyer, if you're young especially, you might not want to take out £60,000 for a pension, and that would be a true add back that you would add back to the profit of the business. So in the example of a business doing £150,000 in profit, if you'd add back that £60,000 to the profit number, then the profit is actually £210,000. But you will see business brokers and sophisticated business sellers adding costs back to the profit line that you need to challenge, and that's how you can actually get the reduction in the price. I was just talking to someone that I was talking to the other day, and there were some add backs that the business broker had put back onto the profit line, and I challenged, or on the call anyway, I said, you need to challenge these adjustments. So the profit was 280 something thousand pounds that was in the profit line. And I said, right, this potentially can go down to 200,000. Now, what does it mean if you are challenging add backs? So let's take the example of the person I was talking to the other day. £280,000 is the profit number that the business broker said is adjusted EBITDA. And I said, you need to challenge the website cost. You need to challenge someone. So you can't accept those. And why will you not accept those and actually bring the profit number down is because, don't forget, when you're buying a business, you're paying a multiple of profit. So let's say, for example, you're paying a multiple of 3 and the number is 200,000 or 250,000. Let's use square numbers to make it easy to understand. Let's say the business profit is adjusted EBITDA 250,000, which is being presented to you. Now, if you're going to multiply 250 by 3, that's £750,000. Because you're challenging those add backs and you're saying, no, actually the profit is only going to be £200,000, then you will pay a total purchase price of £600,000, an immediate saving of £150,000, which was initially being asked of you. Now, that's just a starting point. We haven't even got to negotiation of the multiple and negotiation of other matters, meaning the deal structure. It's just reducing the overall purchase price itself. And that's why you need to challenge add backs. Yes, this is what we done, and we got the business acquisition from 750 down to just north of £400,000. Then we had a deferred consideration, and I would advise that you definitely have a deferred consideration when you are buying a business. Now, you need to be fair as well, so you can't just challenge every single add back. Look, especially if you want to do multiple acquisitions, then you have to be ethical and you have to be moral and you have to have a business sense in your mind when you're actually doing these transactions. If you want to do multiple transactions and you're screwing people over, no one's going to do business with you, right? Because you're screwing people over. So you have to be fair and you have to be able to do transactions which make sense. So you can continue to build up a reputation that, number one, you can get deals done, because that's the most important thing. Even if you screw people over, if you're known to get deals done, then brokers will still talk to you because they know that you can actually get something to completion. After you've got something to completion, if you're acting honorably and you're acting in a way that actually people want to continue to do business with you, then brokers will be even more happy to talk to you, and especially business sellers directly. So alhamdulillah, I'm in a position now where people talk to me directly. They know that I can get deals done, so they will bring businesses to me and ask me whether I want to buy those businesses or not. And of course, I have to make that decision whether I'm going to go for that as a business acquisition. So I want the same thing for you. You need to be in a position in which you can assess a business. Now, also, you heard me multiple times say, look, you want to be ideally going for businesses which are larger businesses, north of 1 million in revenue and ideally 200,000 in profit. There are some instances in which you can go for something which is a little bit lower in revenue, but the profit number still needs to be high, because there needs to be enough margin in there for you to be able to take an income while the debt service is being paid off, right? So whether you're using investors or whether you're using lenders or whether you're using seller finance itself, there's a period of time in which that cash, the profit, is going to be locked up and you're going to be paying out other people. You need to be able to take an income for yourself. Now, what is that income that you have to take for yourself? Only you know what's good for you. But ideally, you want to be in the top 10% of the country that you live in. I think that's a good, fair assessment. And even if not, you're not in the top 10%, at least the top 20%. And we're only talking about the lockup period where, there's a lot of debt being paid off in the initial years. And then after that, you should be able to take a very nice, comfortable six-figure, multi-six-figure, or even seven-figure income from your business. But, that's a longer game. Dan Pena says you can't make wealth on one transaction, you have to make multiple transactions, and that's when you actually build wealth, which is absolutely true. I know this firsthand now as well. I thought when I was starting out buying businesses, I'll buy one or two businesses and that's it, I'm set for life. And although it has made me, alhamdulillah, very, very comfortable, I'm not set for life, right? You need to do multiple transactions and you need to do them that they're big enough to be able to actually make something for yourself. So that's how you will be able to challenge adjustments to EBITDA and get a reduction on the asking price. What else did I learn from this transaction that I did? So this transaction that we did, there were multiple shareholders. It's always more difficult when you are buying a business which has multiple shareholders. In fact, the first business that I ever bought, there were two partners who were selling the business together, and that was tricky enough, right, with two people. This one had three, yes? And you just need to be careful that when you're buying businesses, how many shareholders own that business? Because the more people that own the business, number one, the more people actually have to approve a transaction. Now, really and truly, a director can sign off a transaction and screw all the other shareholders over, but then that's a messy situation, and normally that doesn't happen. But if you have 3, 4, 5 people who you're buying the business off, it's just going to get messy. So I advise that, especially in your initial transactions, you go for simple shareholdings. Maybe one, maybe two people, or one person is the best, because of course then you only have to sort of convince one person to get the deal over the line. But two people is sort of your maximum. Once you get a bit more sophisticated and people know who you are and you can get deals done, then if you're going for people, businesses which are owned by multiple people, then that will also be acceptable. But this is the first time that I ever bought a business off someone or a business that is owned by 3 people. And it was a little bit more complicated, just even, for example, getting the document signed. So, for example, I think 2 people were going to the lawyer's office and signing the documents. There was one thing that physical signatures were required. And then the third person was unable to get there till whatever time it was. It's just a longer process to do something as simple as signing the documents. Now, yes, there's, DocuSign and online e-signatures and everything like that. And that, of course, makes life easier. But sometimes even that is difficult, because if you've got a shareholder sitting in a different country, then you have to think about time zones as well. So it gets a little bit messy. You want to keep it simple, especially for your initial transactions. So if there's any message, there's lots of videos on this channel which talk about buying businesses, especially the masterclasses. They're a wealth of information. Then you need to just, think about these. In every single transaction that I do, every single transaction that you will do, you will learn something new from it. And that's the thing that I have massively taken away from this one. Challenge the adjustments. And when you're buying from multiple shareholders, it's always going to be a little bit more tricky to get the deal over the line. But nevertheless, you just need to push to get the deal over the line. Look, when you're buying a business, it's a long transaction in itself. Buying a business is going to take at least 3 months to get over the line, and that's the fastest. Really and truly, you should allow 6 to 12 months to get a transaction done if you're buying for the first time, right? 6 months, normal length of a transaction. 12 months, 7, 8, 9, 10, 11, 12 months if there's a delay. Like, for example, the first business that I bought, the transaction took around about 12 months. It was maybe even 13. I can't remember. It was, it's all a haze, that first transaction. But I get deals done within 3 months now. So it's a longer process. And that long process, you need to push through. You need to overcome the challenges. At any time, the deal could be on, it could be off. It could be on and it could be back off. It could be back off and it could be back on, right? So you need to really control your emotions as well. I must say one thing, that this transaction was pretty stressful for me, in the sense that I had to overcome many challenges that I didn't have to overcome before, because we actually got hold of a larger investor this time as well. And there were other conditions that investor had, which I never previously had before. But I'm glad we got through those conditions, because once you do a transaction with a large investor, then it just unlocks a long relationship, which is always going to be good. So always be, there's two things that you need to be doing. You always need to be talking to business owners or business brokers, meaning deal flow. And you also always need to be talking to investors and lenders to get money to close those deals. And then, of course, you need to control your own emotions and need to be able to do a good transaction. And of course, I talk about value acquisitions because I actually didn't do any acquisitions last year. When I say last year, that's in 2025, I did 0 acquisitions. And that's not for lack of trying, actually, but many deals fell through. However, I was only looking at businesses which are really going to move the needle. And that's what you need to look at for yourself. You might be a high net worth individual. And if you are, then what's going to move the needle for you? Is buying a business which is only doing 200,000 in a profit. And I'm saying only 200,000. I mean, like, for you, if you're a high net worth individual, 200,000 isn't really going to move the needle. Well, maybe if you're high net worth, if you're ultra high net worth, then it's not really going to move the needle. But if you're a high net worth individual, it might move the needle a little bit. So look at the transaction sizes that make it worth it for you, and what kind of business are you buying. The business that we bought is actually a significant business in the area that it's located in, right? It's potentially the top business in its industry in the location that it's located in, and therefore it's a valuable acquisition. Because how often are those opportunities going to come around, right? Very rarely. So buy good businesses, buy high quality businesses, buy businesses which have built up brand reputation, buy businesses which have got a certain turnover, certain profit, buy businesses which has got good teams in them that are running them, and so on. And that's how you know that you're going to do a successful transaction and get a deal over the line. So if you want to find out more on how to get a transaction done, click the link in the description and I will see you on the other side, where you can get a value acquisition done. I'll see you in the next video, which is popping up somewhere over here now.